Hey, good morning. This is May Valensky with Driving Markets, driving while talking about markets. Remember, anything said in this piece is an opinion only. The channel is for their educational purposes to enhance your knowledge and give you a little bit of information, and hopefully that your trading will do well. Remember, anything it's in your account, it's your trading, nothing to do with me. Everything's your own money. Okay, so let's kick off. So the markets yesterday closed downside. Let's have a quick cover of where the headline rates were. So the Dow closed down 431 points, S&P 57 points. The Dow closed down 431 at 33,696. The S&P closed down 57 points. The Nasdaq closed down 214 points at 11,855. Just to let you know, those markets are down today. The Dow's down another 118 points. The Nasdaq's down another 100 points, and the S&P is down 15 points as we talk at the moment. You had the 10-year Treasury up 3 points at 3.84. You had Bitcoin touch yesterday 25,200, came all the way down now to 23,400. We'll dig a bit deeper into those numbers as we go on. The FTSE's running at 79.87, so around about the 8,000 level, and the European markets, I can't give you those numbers because I can't remember them at the moment. And the pound against the dollar is running about 119.5. Dollar yen is about 134, moving up there, and the euro dollar is about 106. Okay, so that's a bit covering of the numbers. That's been requested and been advised by one of my senior colleagues. Give some headline numbers so at least we know where we're standing. Now let's have a look what has been driving markets. Before I go into that, a lot of viewers have commented that the driving markets at 3 minutes, 4 minutes is simply too short. So I'm confused now what to do, whether we should have it 8 minutes, 10 minutes, should have it 3 minutes. So I'm just going to talk about it. However long you want to watch it for, just watch it. I'm just going to give the report and we'll go from there. Okay, so let's have a look at what is driving markets at the moment. So this week we've had three main numbers out. Okay, number one, the CPI, Consumer Price Index, came in, that is the retail price inflation in the US, came in higher than expected. And then you had the retail sales. Retail sales were expected to come in at 1.1%, 1.4%. They came in at 3% in the US, again in inflationary numbers. That's two inflationary numbers, CPI, retail sales. Then on Thursday, you had the producer price index, which is the wholesale inflation number. That came in well above expectations. Expected to come in at 0.4, came in at 0.7. So three inflationary numbers. Initially, the markets ignored and disregarded the numbers. And then yesterday took a bit more heed and they came off. So it looks like the Fed will be raising rates at the next meeting by 25 basis points. In my opinion, it's going to be 50 basis points, but let's say 25 basis points is the consensus of opinion amongst Wall Street and amongst the traders, analysts, and the bankers. Okay. As a result, the dollar went up because no further interest rate rises were priced into the dollar. So the dollar went up against the pound, against the euro, and against the yen. Interestingly enough, on dollar yen, those who are forex traders, it looks like a solid trade all the way back up to 145. The moment it's 134, came all the way down to 129. Looks like it's going to go up to 145. Those who missed out on the dollar yen trade initially have got an opportunity to get back in on it. Going on to Bitcoin, can't miss out cryptocurrencies. Remember, I've said all along, cryptos have got no fundamentals about them. There's no economics and there's no dividends, there's no yields, and there's nothing. It's just a binary, it's an up or down. And Bitcoin jumped yesterday all the way up to 25,200 and then came off in spite of regulation coming in the US and in the UK and other jurisdictions. Bitcoin and the cryptos went up. However, they've come down now, so it looks like the 25,000 level on Bitcoin is the main resistance level. And we did say, and I did say on this channel all along, if it doesn't clear the 25,000, then it's going to float back downwards. I'm not sure at the moment it's going to float back down to 19,000. Could do. Not too sure. It looks like it's range bound between 22 and 25. Like all the rest of the markets, they're also range bound between 22 and 25. Looking specifically at some stocks, Tesla is well overvalued. It's well overpriced. and needs to come down. It's far too high at $213 a share. Far too high, these levels. I've got it coming all the way back to 140, especially if interest rates go up. If rates rise, you're going to see the Nasdaq and the high-tech sector absolutely be trashed, because they're totally dependent on new money and cheap money and funding. Most of the Nasdaq and most of the high-tech sector do not make money. Okay, so only a small number of companies make money, obviously, like the Apples and the Metas and the Amazons and the Nvidias and semiconductor sector, that is, etc. So the most of the high-tech sector don't make money. Therefore, rise in interest rates is going to have a major impact on those stocks. So you can look at Tesla and look at Meta, for example, to go down. Look at Apple and look at Amazon also to go down. Google's going to have major competition now from Microsoft, because Microsoft is revamping its whole Google search engine, Bing. And that's going to have a major chat GBT element to it. So they're looking to really compete with Google, and Google could be losing significant market share going forwards. That's going to put that share price under pressure. Looking at bonds, as I said, I expect the 10-year US Treasury to continue rising. It's 3.84 at the moment, probably going to go to 4.5, 4.6 by June 2023. We're going to have a rising interest rate environment and a rising inflation rate environment in the US. Also in the UK, just to be sure, you've got the inflation dropped it from 10.5 this week to 10.1. That's only a blip. It's probably going to continue rising as energy prices, food prices, housing prices. Remember, as rates rise, housing and accommodation becomes more expensive. Okay, so you're going to have that impacting also. Oil ticked off a little bit yesterday, came down due to maybe global demands or maybe concerns that we are going into recession. We're definitely going into recession in 2023, and it's going to be pretty harsh. Okay, it's going to be worse than the 2008 banking crisis and worse than the dot-com crash of 2000. Most people who listen to this channel were only just born around about the 2000, 2003, and therefore they haven't experienced any major crash as for in their adult life. But when a crash comes, you will not know whether to buy, sell, what stops to put on. You just simply won't know, because in a fast market where most of you and most people have not had experience, that's when you get completely and utterly burnt. Okay, so be aware of that. As regards dollar, expect dollar strength going forward, as now there's more fears of rate rises. Equity markets will drop as those fears of rate rises come more to fruition and more inflation indicators come out. It's a big one to check. Okay, that's it for the moment. This is Mayor Walensky with Driving Markets. Driving while talking about markets. You can share, subscribe, comment. Let's get the channel up and running. Have a good day.